Hello everybody, welcome back for another video. Hope you're all doing well. Hope you're all doing absolutely fantastic. I know that stuff is a little crazy right now, so when I do say hope you're all doing absolutely fantastic, I do mean it. I hope you've somehow managed to get around all the craziness and that you're all having a great day. Don't forget to leave a like on the video. It helps out the channel a lot. YouTube uses the likes to actually help the algorithm learn how many people like the video, like the channel, so they can show it to others. And without any further ado, because that was an ado, let's jump right into it. The optimism is still there, as I've stated before in other videos, as we forcefully tiptoe our way into July with a renewed sense of maybe, like a literal shrug, the word maybe, and then a question mark after it. It appears that things might get better than they currently are. If you missed last video, part of the discussion has been that there, almost out of nowhere, appears to be a renewed sense of optimism surrounding the Federal Reserve and lowering interest rates. You should know what that means if you haven't been here or missed any of the discussions. The United States and the world are obsessed with debt. And historically, we see that when the Fed lowers interest rates, it typically puts us or asset holders in a position where assets rise in price. As we've seen, the European Union, they lowered interest rates eight times in a row. I believe many other Asian countries have also begun doing the same, as the world's economy isn't looking too hot, and therefore they believe that lowering interest rates will incentivize investors to basically increase inflation. When you increase inflation, you lower the valuation of said currency, but you also raise the value and price of other assets. And as countries are looking for new money to flow into their markets, and one of the core principles of Bitcoin has been, if the money supply increases, Bitcoin price go up. If the debt level rises, Bitcoin price go up. If Fed lower interest rate, asset prices rise, Bitcoin prices go up. Altcoins happen as well. And I mean loosely wrapped around all of that is the expectation of a coming back with a vengeance alt season sometime in the next 3 weeks. I know that sounds short term, but that's basically because we are waiting for the SEC to deliver news in the next 3 weeks on about 20 different ETFs for multiple different coins. So we find ourselves right now, as I stated before, I don't know where this came from, but apparently the news currently is that within the next couple of days, we might get an interest rate drop. I don't know if this is wishful thinking or if this is actually going to happen. Fundstrat's head of research, his name is Thomas Lee, says that the Federal Reserve may be forced into a rate-cutting phase after overdoing monetary tightening. Yes and no and yes. The Fed has been forced into this quantitative tightening position because the economy's not getting any better. I saw something on financial news last night and my jaw didn't drop, but I was like, it's so easy for these people to lie. They were stating that the Fed needs to lower interest rates. It's not doing the world any good by them tightening the interest rates. The Fed needs to do so and so because it'll blah, blah, blah. And I was like, you have to once again understand the ramifications of inflation already being bad. The numbers that we're getting for current inflation are also fake. Inflation is not 2%. The valuation of everything, or the cost of everything, your supermarket runs, the cost to lease a car, for insurance, for rent, these are all what actual inflation is. The moment we get the Fed lowering interest rates, everyone with assets will do incredibly well. The other 250 million people in your country are not. This usually leads to difficulties that you see in the news that might also end up affecting you if everyone else isn't doing well. So the Fed has tried to keep interest rates where they are because they're probably thinking about the actual security of the everything. Anyway, so yes, a lot of people have been calling on the Fed to lower interest rates. And apparently people think that this is going to happen like soon. In a new interview on CNBC, Tom Lee said he's watching for a point where the Fed could run into an accident, where it waits too long to address a slowing economy. Lee says he's anticipating a potential panic scenario from the Fed. He said there could be an accident because what we are ignoring is that the housing is choking and collapsing under the weight of higher interest rates. No, the problem is the problem actually is that housing is too expensive for normal people. So people are then forced to take out mortgages to be able to afford or get the American dream or have something, because in many cases, and I'll give it to you this way, it's a triple-edged sword. In many cases, getting a mortgage ends up being cheaper than actual rent. Many cases, but not all. So sometimes on news programs, they'll show you, if your rent is $1,800, well, if you get a mortgage, your mortgage will be $1,600. Well, the part that they're missing is that the average person doesn't have $80,000 coming out their hoo-ha to put down initially for the actual mortgage. So cool, you got the $1,800, you got the $1,600. When you own a home, there's a lot more costs associated with it than simply renting. Sometimes you'll have rent and maybe you'll have to pay X amount for electricity, for gas, and then for your internet. When you own a home, you have to pay to keep your lawn looking good. You have to pay for water. You also have to pay for sanitation that ends up happening every now and again. You have to pay for gas. You now have a house, not an apartment, to actually pay for your electricity. Then you also have a fluctuating interest rate. Then you also have insurance on the home. So that $1,600 actually ends up going to $3,000 per month, and that usually ends up being the issue. So the system wants people to continuously be in debt. It's this idea that if you lower interest rates, people will be more comfortable with being in debt. The housing market is doing actually spectacularly dystopian because all these companies and these institutions, the corporations, they're buying all the homes. They actually benefit right now the same way that they benefited in 2008, 2009. They're actually going around looking for people who are struggling paying their mortgages or can't keep up, and they're buying the homes from them in cash. The problem is cash doesn't fuel the market. Cash doesn't fuel the system, it's debt. You want someone in this system of debt to go into debt for 30 years to continuously pay the bank over the course of that time. So one of the ideas from these very out of touch wealthy people is if we get interest rates to go lower, the average person will then go, well, cool, 3% is lower than 4, and they'll be more inclined to get into a 30-year debt cycle. This is what they mean all the time. The labor market, also on the other side, also isn't doing too hot, but it's doing just fine for the companies who are automating and who are using AI. Have you seen recently all these companies? First of all, you've seen them on the news talking about layoffs and cutbacks, wink, but they're also talking about how they've never made more money than ever. It's because they're firing people. And they're able to show their shareholders, well, we got rid of 2,000 people, and now those positions we're actually going to be automating. That's how the system works. That's why, not to get heavily off topic, but when I talk about like buying assets and making sure you're ahead of the curve so that you benefit as well when everything does actually hit the fan, that's what I'm talking about. Tom Lee said, and I quote, "There could be an accident because what we are ignoring is that housing is choking and collapsing under the weight of higher interest rates. And the labor market isn't as strong as it appears. No, the labor market is garbage. We've gone over that several thousand times. We don't have to do it again. But they don't care because that's how it's meant to be. Understand, and I'm not going to get preachy here, but understand why you're in crypto, why Bitcoin is a thing. You keep thinking that these things don't or won't affect you. They affect you more than you could possibly begin to imagine. The point of the system is for us, me and you. It's for us to be consumers. It's for us to be in debt. It's for us not to have assets, nonetheless cash-bearing assets. How dare you? Getting a return from your assets, that's not supposed to ever be a thing. But now there's this weird, we all know where everything is going. Don't sit there and pretend. It's exhausting to have people sit there and try to believe that the system is made for them. Remember when I was telling you all before, I was like, can you guys please stop worshiping Elon Musk and all these other people? They don't care about us. They don't care about you. They're not trying to make you richer. They own the system. What they're doing will benefit them. And then I have people on Twitter being like, you don't like billionaires. Yeah, I don't, because they're taking all the money from you and your families. You sit there delusional, thinking that you have $30,000 in your bank account that you've been saving for all these years, and that magically is going to become $1 billion. No, my friend, the system is against us. That's why we have Bitcoin, because it's anti the system. Tying into the Tom Lee news as well, this is the rumor that's constantly floating around. If you're not looking at the screen, it says Fed Governor Waller says central bank cuts could happen as early as July. I don't know where this came from. I don't know if behind the scenes, what's his guy's name? Mapadop. What's his name? Jeremy Filer? The guy who runs the Fed. Tammy McFay. Whoever runs this, the thing, I can't think of the name for whatever reason. I literally can't, like you don't understand. My brain is completely mush right now. Maybe he had a discussion, maybe someone told him something, but there's a lot of rumors that apparently in July, wink, that the Fed is going to cut rates. I'll give you the real answer and then the other real answer. If the Fed cuts interest rates, we're going to see a mathematical cataclysmic float into the air for all asset prices. On the other hand, I don't think the Fed is going to cut rates in July. I think people are saying this to keep markets afloat and keep people thinking that something good is just right around the corner. Jerome Powell, there we go. Jerome Powell said he has no indication to cut rates anytime soon. He said maybe September, and even that was like maybe like that, like maybe. So we heard earlier this year that the Fed was cutting rates 3 or 4 times like by now. And as we've currently gotten 0, we'll see if this doesn't happen in July. We were basically lied to our faces. This is floating around everywhere. Everyone's throwing out Fed cut rate July. If it doesn't happen in July, just anticipate October or November. I think we're probably going to get 1, and I think it's going to be like a quarter of a point, like 0.25. It won't be anything crazy. If you didn't see, Jerome Powell is kind of like the last thing really standing in the way of the United States dollar, like collapsing. The US dollar to other currencies this year has completely gone down. Like, it does not look pretty. If they lower interest rates and inflation increases by a lot, people are already de-dollarizing because the dollar is not, the strongest. But yeah, so if we get interest rate cuts, you will of course be hearing about it. That's how the news works. But I don't think we're going to get one in July. I feel like all these people are saying it just to kind of like, no, things are fine. Like that. This is how it kind of feels because it came out of nowhere. Anywho, that's the people are looking for a Fed panic or for this to happen or so and whatever. Okay. Let's move on. Also in news, everyone seems to be copying everyone else. That might be the trend for this cycle. Years ago, there was always some kind of a thing that popped up. It was staking or it was IPOs or STO, like all these different things popping up in crypto, and everyone was mimicking everyone else. Apparently, the brand new thing is to close your eyes, turn in a circle, and point at a coin and announce that you're creating a reserve for it. That seems to be the thing that we currently have going on. A company by the name of Trident Digital Tech Holdings. They've announced plans for an XRP treasury. And they said that they're going to put up to $500 million into a strategic XRP treasury reserve. Yes, we had news of another company, this was a week ago, something like that, who announced that they were also going to be doing the exact same thing with XRP, but I think their numbers were 100 million. Not that it's a small number, but you understand. There are rumors of there was a rumor of another company doing it with Cardano. There was another company a month and a half ago who I think was looking for attention, who announced that they were doing it for Solana, but they're also, it was kind of, if you don't remember, one of those things where they were like, yeah, we are certainly going to be doing that. That sounds wonderful. Like that it was like, oh, you guys are probably fibbing. So yes, it feels like everyone's. We also had Joseph Lubin, the co-creator of Ethereum, announce 4 weeks ago the creation of a brand new company, of which I believe he is going to be CEO, to create a new thing that's also going to have, I think, starting out with was it $100 million, $200 million Ethereum reserve. That seems to be the thing, at least for this year. Everyone's talking about a reserve of some point. So Trident Digital Tech Holdings is looking to get one for $500 million. There we go. Of ZERP. The firm expects the Treasury rollout to begin later this year because, of course, why would they do it now? Gotta kick the can down the road. Publicly traded technology services company Trident is planning to raise up to $500 million to build an XRP treasury. The firm announced on Thursday. The Singapore-based firm, which has a blockchain-based identity solution as its flagship product and trades on the NASDAQ as TDTH, also appointed Chaince, C-H-I-N-C-E. I would say Chaince. Chaince Securities LLC as a strategic advisor. Sure, why not? They said, and I quote, "This initiative reflects our belief in the transformative potential of blockchain technology for capital allocation and cross-border value transfer. Through this initiative, Trident aims to demonstrate how public companies can thoughtfully and responsibly participate in the ongoing development of decentralized finance." So cool. Apparently it's going to roll out in the second half of this year. I would assume towards the end of the year. This is what usually ends up happening. A company announces something, they try to get hype from it, their stock price goes up, and then later on, years or months later, they announce that they did the actual thing. We can logically assume they're probably going to be buying OTC, over the counter, and not actually spot, because it appears that all these companies have only been buying over the counter. None of them actually want to move prices within this market because they want to buy it for themselves, but they're also really missing the part where the public, the retail investors will not remain in this market unless prices actually move. So let's see if they're brave enough to do a good 50-50 to actually move up the prices of these coins, as we went over in the last video. But as you might have imagined, this was, of course, popular news. Another company is talking about XRP. Another company is talking about a treasury, a reserve, money going into the cryptocurrency market to buy up the coins before everyone else can. We recently had news from that one person who said that he is expecting that people are going to be priced out of XRP. And I said, yeah, sure, because they already are. The general mindset, and I know there's always one, so put your hand down. I know there's someone who's like, XRP's at $2. Well, my friend, if XRP goes from $2 to $100, that's not going to make you rich. So the person proposed owning 10,000 XRP. The problem there is the average person can't afford $500. Nonetheless, $1,000. Nonetheless, $20,000. See what I did there? Math. Nonetheless, $20,000 to buy those 10,000 BTC. Same exact thing with Bitcoin, same exact thing with Ether, and a plethora of other coins. These companies are coming for it, and they're doing it in a very diabolical way by making sure that prices aren't affected by their purchases. That's the company called Trident is announcing that they're going to be raising up to $500 million to buy some XR&P. And yeah, let's move on. I roll my eyes at a lot of things, but this one actually hurt because I saw my brain as like my eyes just kept on rolling, because I would love if this was true. If this actually happens, this is going to change the face of crypto as we know it, because everyone else is going to mimic them, and we are going to be in a world where crypto, not corporately takes over, but where everyday things can happen through crypto continuously. The eye rolling came from the fact that we've heard this before. Not from this specific brand, but we've heard this so many other times and it's never happened. And I wish that these companies, institutions were just more honest with us and maybe even themselves. Polygon. You know Polygon. Polygon is the layer 2 solution on top of Ethereum. As Ethereum, we keep hearing, is planning on initiating, activating, halveating 500 transactions per second, 1,000 transactions per second. We've been hearing that since 2015 and it still hasn't happened. Regardless of the news we've heard this year from Ethereum, that all of that will happen by 2027. Sure, good luck. Polygon has been the layer 2 solution that popped up around 2021 as like the definitive thing that was like easing the tension and pressure on Ethereum by having everyone use their chain and having very low fees. The finality of the transaction was happening on Ethereum and everyone was really happy. Polygon has announced that they're trying to get to 100,000. Yeah, I know. 100,000 transactions per second on their roadmap. The problem is, my friends, is that we've heard this one before. We've been hearing this since 2016. The number has always been 60,000. Some of you remember that number. 60,000 is the amount of transactions that Visa and MasterCard are currently able to handle per second. The thing was, back in the olden days, is that if your chain was capable of doing 60,000 transactions per second, we had no need for Visa and MasterCard. So every coin back then, Cardano, Bitcoin Cash, Satoshi's Vision, Tron, Bcash, Ethereum, you name it, across the board, everyone kept on saying that their chain was going to be able to do 30, 60, 100,000 transactions per second, and still not one chain does this. So Polygon has announced they're going to be the one to do it. The network is set to deploy its newest upgrade in the first week of July, which will enable over 1,000 transactions per second. Wow. Let's hope that actually ends up happening. The POL token is now available on the Solana network through something called Wormhole NTT. Polygon has announced that it is targeting 100,000 transactions per second in another significant move as its POL token gets listed on the Solana platform. Polygon recently had a little rebranding. Their token is no longer, what was it before? It wasn't POL. It had a different, was it PG? I don't remember what it was, but they've rebranded as POL. The new CEO of the Polygon Foundation, his name is Sandeep Nailwal, shared this in a roadmap on Twitter. According to Nailwal, the roadmap is already in motion with the first release of the Amoy testnet set to launch on the mainnet by the first week of July. This is expected to increase Polygon's proof-of-stake speed to over 1,000 transactions per second. More upgrades are expected to follow, he said, by October. He said, by October, the chain will become one of the most performant and better UX chains in the ecosystem. By October, with 5,000 transactions per second. By October, you might hear me say that over and over. Do you want to know why? It's because we've heard stuff like this before. And then what ends up happening is, by the time we get to that month, someone goes, oh, no, not this October. We meant the month between October and November. Like, it's always this kind of, once again, I don't think that it's not possible, double negative, so I think it's totally doable. But forgive my skepticism when 80 other chains have said the exact same thing since 2015, and not a one of them has done it. October. Based on the roadmap, the Polygon proof-of-stake chain will be integrated with the AG layer by the end of 2025 to build an ecosystem, they say, where money, assets, and verified data can move globally seamlessly. If they do this, if they actually manage to, do all of this properly, this would also help out Ethereum immensely, as Polygon is used as the Ethereum layer to kind of really, push all the transactions through. This will ensure that money moves quickly, providing end users with the comfort. Can I not speak English? Okay. Blah, 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 blah. Awesome, awesome, awesome. All these, hear me and hear me good. All these are part of the long-term plan to push Polygon's transaction per second to 100,000 transactions per second by 2026. Right. I would love nothing more if we finally had a chain that fulfilled the promise of our ancestors back in 2015. If we can go from 1,000 transactions in July to 5,000 by October to 100,000 by, for those of you who don't know what that means, it means anytime before or at. So when you say by 2026, it literally means this could happen in November. This could happen in December. By 2026 means I'm going to give you a present by your birthday. It is on the day of that. By the beginning of 2026, 100,000 transactions per second. A mission that the project believes is achievable. Thus, it plans to scale effectively while attracting more validators to boost decentralization. If Polygon manages to get to 100,000 transactions by 2026, this would become the third, if not the second biggest coin within the market. It would be the only coin that can do literally 50% more than Visa and MasterCard. It would be the chain that everyone would flock to because it would work seamlessly. Other chains right now, my friends, do 30 transactions per second. Some of them claim to be able to do 200 and 300. If you didn't count right, 200 and 300 is not even remotely close to 100,000. So if you combined all the top chains and smash them together, it wouldn't even remotely be remotely to 100,000 per second. Polygon would become the coin to own. However, and I say this nicely, forgive me if my skepticism is running rampant simply because we've heard this before. I think that's going to do it for this video. I do hope that you're all doing well. I hope you've all enjoyed. I hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do sincerely hope that it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.